The market is still facing some major obstacles like trade tariffs and slowing growth, especially when it comes to China. Eunice Yoon has that part of the story for us tonight from Beijing.
The Commerce Ministry was generally positive about the trade talks. The ministry issued a statement saying that the two sides conducted in-depth and detailed exchanges and laid the foundation for resolving mutual concerns. At a regular press briefing, the ministry spokesperson said that the one-day extension also showed that the talks were serious. Now, in these trade negotiations, a lot of focus has been on how to get Beijing to make good on its promises. One big complaint in the business community here has been that Beijing doesn't stick to the spirit of an agreement. The USTR expressed that in its statement after the talks, saying, any agreement should provide for complete implementation subject to ongoing verification and effective enforcement. Well, the Commerce Ministry pushed back on that today, saying China thinks the mechanism is important too, and both parties have an obligation to keep their promises. The comment shows that China doesn't particularly trust that the U.S. will hold up to its end of the bargain either. Amid all this talk, new data out of China show that the economy here is slowing at a faster pace than expected. Both CPI and PPI missed consensus. Consumer prices dropped to a 6-month low. Producer prices fell to their lowest point in 2 years. Nomura called the pace of the slowdown worrying. This is an economy carrying a tremendous amount of debt, and economists are now talking about China entering a deflationary cycle that makes the debt more burdensome than it already is. The Trump administration already believes that it has the upper hand in these trade negotiations, so this latest data will likely only encourage the policy team that it has more leverage in the trade talks. For Nightly Business Report, I'm Eunice Yoon in Beijing.